how it was created, the pioneers, the first principles, and the evolution of value investing. We're going to talk about all of this in today's video. Value investing was developed in the 1920s at Columbia Business School by finance professor and his adjunct David Dodd and Benjamin Graham. They wrote the classic text Security Analysis in 1934 and are regarded as the field's pioneers. Graham thought that research should be used to evaluate a stock's true value. He collaborated with Dodd to create value investing, a process for finding and buying securities that are underpriced compared to their actual worth. The concepts of Graham and Dodd established a reasonable foundation for investing decisions. One financial researcher description that I like really much is from Gisli Allen, who described the philosophy developed by Graham and Dodd as a fundamentally different approach to stock picking and investing in securities by proposing that the investor shouldn't try to anticipate the price movement entirely. Instead, the investor should try to estimate the true intrinsic value of the underlying asset. Given time, the intrinsic value and the market value will converge. I'm talking about intrinsic value, but what is it? Value investing in Graham and Dodd's time emphasize 4 ideas. In summary, we have first, intrinsic value. You can see it like this. Any companies have a value which is justified by facts, for example, assets, earnings, dividends. This means that it is a measure of what an asset is truly worth and not necessarily its price at the moment. We call that the intrinsic value, and it's the base of value investing. Second, we have margin of safety. The lower the price of the stock is to its intrinsic value, the higher the margin of safety is. For example, let's say that a company's shares are trading at $10, but an investor has estimated the intrinsic value at $8. In this case, the margin of safety is 25%, meaning that the share price can drop by 25% before reaching the estimated intrinsic value of $8. Third, you should view market prices as if being in business with a depressive and reactive partner. Your partner offers to either sell or buy shares at prices strongly correlated to his mental state at each time, ranging everywhere from highly pessimistic to widely optimistic. This is why you often hear about the stock market being emotional or not rational. People often use their emotion trading stocks, which directly affect the stock market. You need to take this into consideration and ask yourself if a stock is truly undervalued or if they might have other reasons the price might be lower or higher than the actual price. And fourth, diversification. For risk management purposes, Graham and Dodd thought you should carry at least 40 different stocks at each time, as diversification is one, if not the best way to reduce risk. Graham and Dodd began teaching a reason-based approach at Columbia Business School in 1928. For many years, they continually revised their methodology and their courses. Graham taught to Columbia, UCLA students, and even to Wall Street professionals as well. Dodd retired in 1961 and Graham in 1965. From now on, value investing was vigorously practiced by a generation of investors through several decades. Some became a legend in investment management, including Warren Buffett, who may be the most well-known value investor in history. He actually got an A+ from Ben Graham and Columbia in 1951 and made his fortune using the principle of Graham and Dodd's security analysis. He is today worth more than $96 billion and is one of the most globally known investors of all time. Despite a lot of changes in the economy and stock market during the last several decades, value investing has proven to be one of the most successful money management strategies ever developed. The success of value investors during the second half of the 20th century proved that the method works, even versus most practiced modern investment theory. The fact that it was developed in the 1950s and 60s is just icing on the cake. As always, thank you for everyone for watching. Don't forget to comment, like, and subscribe if you liked it, and have a good day.